Hey everyone, welcome back to the channel. I'm Doug, the retirement guy with all your monthly ETFs. Doing something different here. I first want to say Merry Christmas and a Happy New Year, everyone. I hope you had a restful holiday break with your family and loved ones. I know I did, and that's why we weren't having very many videos because we were enjoying life. But with 2026 around the corner, I'd rather than me typically diving into a monthly ETF or changes into a portfolio or anything like that, I really thought about and I sat back and said, what happened in 2025? How good of a year did we have? And everything related to that. So I came up with some top stories of 2025. And then I got a lot of information I've been reading about 2026, what's going to happen down the road. And I wanted to share that with you in a little different format, a little different ways. So I'll give you the 2025 market review and a 2026 outlook, navigating the volatility and seizing the opportunity moving forward. Hopefully you guys like this. If not, I really appreciate though you being here, being one of our subscribers. I can't believe how many YouTube subscribers we've added this year alone. If you're not part of the channel, don't be afraid. Hit that subscribe button, hit that bell notification. You don't want to miss a single episode of what we do. Also, I want to thank all of our Patreon supporters and all of our YouTube members. Thank you so much. Without you guys, we couldn't continue to do what we're doing. Let's get into today's video. So notice to all viewers, past performance does not guarantee future results, and the information in this video is for educational and informational purposes only. I am not a financial advisor, so I always suggest that you contact a financial advisor if you need any help with your financial decisions. So 2025 market performance overview. The global markets delivered a mixed but general strong performance across asset classes. Overall, it is an incredible year. It continued an amazing momentum that we've had since 2023, when the market climbed 24.2%. And then last year, when the market climbed 23.3%, not too shabby considering the average return of the S&P 500 over the past 50 years is only 12%. And while the stock market was flying high, a different asset class flew even higher: gold and silver. Gold and silver was one of their best years ever. Gold prices jumped 73%, while silver jumped 174%. The biggest gains for the minerals in the past 40 years. We take a look at the Toronto Exchange. That has done better than the U.S. S&P 500. That one came at 28.5%. When we take a look at NASDAQ at 22.3%, our S&P 500 was at 18.1%. And the only sour note was really Bitcoin, down 10.9% for the year. So I believe there were 7 defining stories of 2025 that really shaped our market and shaped what was going on when we really took a look at it. And it's hard to see the trees when you're inside the forest. But when you step back, you can really see that really only about 7 things really changed our marketplace. And we're going to break down each one of these to give you a good idea of what happened and where, just to give you an insight of what's going on. Now, this one I feel is like ancient history. Our number one story is the DeepSeek drives the panic in Nvidia's recovery. Overnight, Nvidia's stock crashed 17% and took the whole AI market down with it after the Chinese competitor to OpenAI released R1 AI. It claimed to have spent over $6 million training it, calling into question the billions spent on Nvidia's GPUs. Nvidia would continue to sink right up until April, which was Liberation Day, falling 30%, before turning around and soaring nearly 100% in the last 8 months of the year. The important lesson from this one is really just not the panic. What seemed like the end of the world back in January is barely even talked about today, and the fears are widely overblown. You hear it still that the AI is this bubble, but look what's going on. The money is being invested into AI, and of course, Nvidia is the leader on that side of the fence. Story number two, and I still think that we're dealing with this in a strong way, and that is Liberation Day, the tariffs that crashed the market. If DeepSeek seems ancient history, the story feels like it happened yesterday, April 2nd. Trump announced a ton of surprise tariffs, leading the worst 5 days in the stock market since the COVID crash of 2020. The S&P fell over 12%. Even more, this drove panic across the market as investors feared the worst. But the power of the hindsight, we can now see the fears were overblown, and the market has climbed back over 39% since then of all-time highs. But the market has recovered, and the tariffs did have a real impact in certain stocks. Back in April, I basically said investors should not just blindly buy the dip, but first try to understand whether the dip was justified. And one of the couple things that I look at Nike. Its year end is declined by 27%. Luminon, year end down 50%. One of the things I did a video about this and said you have to look at your companies that you're investing in. You have to look at your ETFs that you're investing in. Is it a fundamental issue or is it just a negative news issue? And I found with most of the funds that I was dealing with, it was just bad news. It was just something that we didn't expect. And the companies were performing very, very well. So this was part of our learning lesson that we had to do on Liberation Day. And we still talk about it today as we show different funds where they dropped off in April. And then how did they recover? So story three was the crypto regulation roller coaster. And this one is the one that really, and we're still living it today. So this is a story that just continues. But the reason for all this madness, the pro-crypto regulations, which legitimized stable coins and classified crypto without individual control as commodities. A huge win for the crypto ecosystem that drove a massive rally. So regulators who are trying to control things actually created a rally by putting in regulations and basically saying crypto is a serious piece and it's a commodity. Then in around October, fortunes of the crypto investors took a sharp turn when a flash crash destroyed a ton of highly leveraged traders, wiping out about $19 billion in just 24 hours. That came after Trump reignited a trade war with China, prompting a wave of panic selling that snowballed out of control. The lesson I took away from all this is in the long run, stocks generally return to fundamentals. And when we take a look at this, two companies that really kicked into this one, and the first one I'm going to talk about is going to be MicroStrategies. It was trading at 2.4 times the value of Bitcoin. And the big reason for its crash was the massive premium, which many argued also made no sense. So to me, this serves as a good case study of red flags that fundamental investors could notice to avoid getting swept out of in all the hype. As far as where the crypto market will be going in 26, the market definitely has some challenges ahead. And some saying crypto may be entering another crypto winter. According to CoinDesk, the crypto market is facing big headwinds after MSCI, which is the second largest index provider, signaled that it's reconsidering how the data of automatic crypto buying is through index inclusions. They're treating it as their own insight information. Still, others think the bull market is just around the corner. So it's funny how we get multiple different mixes on what crypto is going to do in 26, what it's not going to do. And you see, crypto all works with off of the regulations. What happens in the trading? What's going on? And if you overvaluate something like MicroStrategies, you need to understand the underlying investment that you're making in your ETFs. The number 4 story is the Google's incredible AI turnaround. And I'll tell you, I'll be honest with you, I kind of missed the Google turnaround a little bit. They had from a 20% decline, which I saw that right off the bat, but I missed the big incline at 106% surge and kind of got into it with some videos a little bit late. The surge through the strategic AI integration. Google faced a significant 20% plus decline from January to May of 2025 due to the fears that the larger language models would disrupt its search business. So everyone was worried about Google as the search organization, that AI would step in, take over. OpenAI and so many other ones would step in and do this. But Google, as the company they are, the strategic pivot that they did, Google transformed into a vertical intelligent AI player. And they integrated that into their softwares, moving beyond just a search to create a comparison AI ecosystem. They made the thing work as a comprehensive to what's already going on. The key milestone is when they launched Gemini 3, which solidified Google's, and we call it the Google chain, the narrative, creating a competitive advantage. And the market response, investors reward Google with that 106% surge in the second half of 2025. It really rocketed, and we've seen this in certain ETFs. We've seen these in the weekly paying ETFs. We've seen them in the monthly paying ETFs, how Google has just rocketed out of this thing. And the last video I did, I showed Google about what they actually are all about. And it's one of these things, I think most people think of Google as a search engine. And the new search engine was basically going to call it AI. But Google sat down and said, hold it, we're just not a Google search engine. We are an advertising company. We are a AI player. We're a technical company. There's so many things intertwined into Google that makes complete sense. And this is why Google has done so well as our number 4 story. Now, number 5. This one here, again, we get into the AI side of things. Seeking a remarkable, another stock that easily made the list of top stories in 2025 is Palantir. Despite the high evaluations and criticism, they continued to do an impressive climb in 2025. They are up 151% in gains over the last in 2025. Now, I have different reports, but I look at it as about 580% growth plus over the past 2 years. So this is showing you that a particular government partial, they have a lot of contracts with the government. They have a lot of things that they're doing all into working with chips and AI and all that kind of stuff. These guys have the investors' confidence that the data analysis platforms will remain strong and driving continued growth into the stock price. So we're really seeing that in 2025, they said we're going to continue on. In 26, it's looking like they're going to continue again because they've put themselves in a strategic positioning. Story number 6. Now, it's maybe not too surprising that some tech stocks like Google and Palantir have outperformed the market. But outside the tech, another sector that quietly has been crushing it is banks. Like I said, while Nvidia climbed 38%, TD America, Canada's second largest bank, soared by over 69%. U.S. banks like JP Morgan climbed like 37%. The reason? It's the incredible surge in capital market revenues driving the trade volume. Assets under management, advisory fees, and underwriting. As the market rebounds since April, the banks directly benefit from the investment portfolios increasing deal making and ramping up. So as the market's doing well, the banks are actually doing well because they're getting able to do more in managing the money. Number 7 is the one that I think it's currently on the biggest list right now, and it's really kind of doing the biggest concern that's out there, and that concern is about the AI bubble and the circular deals. Yet the market is still shifting back to greed. The AI bubble concerns, the circular deals. Between major AI players like Nvidia, OpenAI, Oracle raise concerns about market distortion. Debt from AI spending. Big tech companies are increasing their debt for AI investment, leading a question to, is that sustainable? Then we're also looking at the ROI growing and the return that they're going to get from their AI investment. Is it going to be a big enough of an investment in return? This is what's creating the AI bubble. That's what's creating everything at this point in time. So the question is it true? But the one thing I personally think people are missing is that the AIs are starting to profit from this stuff. They're starting to find ways of creating profitability. Oh, it's early in the marketplace, but it's an evolving industry. It's an evolving part. It's the future of tech side of things. But ultimately, AI is going to have its traction, no different than e-commerce has done. So the lessons learned in 2025, stay calm amidst all the headlines. Don't always just look at the news, take it as negative. Nvidia's 17% crash and now has had 100% recovery. And I hope you were able to be a part of that. Fundamentals over hype. Google's 106% surge over its first initial 20% drop demonstrate that companies with strong fundamentals can overcome market speculations. Always remember thinking of that. Is it a operation problem or is it a news problem? And then also, geopolitics impact a lot of different things. Trump's surprise tariffs caused a 12% drop. We didn't know what was going to happen with that. And then AI's enduring influence is we're getting AI jitters. We're making extreme fears, but we also see it going back to greed. So we're back all over the place with the AIs. So let's take a look at 2026. What do we look forward to 2026 and the forecast and the trends that are coming from the global economy? Well, we're looking at, there's a lot of people out there stating that the market growth is projecting an 8 to 12% market share growth. 8% on the low, 12% on the high. Inflation is hovering still around that 3%. We've lived with a 3%, between a 3 and 4% for how many different years now? The recession risk is actually starting to drop down. 35% of the U.S. population believe that we're going to see a global recession in 2026. That's actually down a little bit. And central bank policies. This is the one we're still waiting for. Is the Federal Reserve going to continue to cut rates? Bank of Japan raised rates, but their market's totally different from the U.S. So are we going to get rates cuts? We don't know. We're hoping for half points. So in key investment things, continued the AI investment cycle. AI-driven super cycle fueling record capital expenditures. Companies are going to continue. They're still planning on spending money on AI. Their focus is shifting from fundamental models to domain-specific applications. Companies are finding efficiencies through AI and integrations. That's going to change the whole AI thing is when you start getting companies using more AI into their integrations, basically creating more profit from the investments in AI side of it. Will the Federal Reserve likely to implement further rate cuts? We hope so. European central banks to maintain current policy standards. And then the microeconomy is it's going to continue working with the tensions of the U.S. tariffs, the geopolitics, raising impacts, and that 35% of the U.S. economy thinking we're going into recession. If we can keep around that 3%, we know what to do in the marketplace. Now, here's one that I started looking at doing my research already for 2026, and these are the areas that I'm heavily looking at. And first one's going to be healthcare. These are the 2026 sectors of opportunities that I'm going to be looking for, and I'm going to be looking for ETFs that fill into this side of it. The aging population is driving growth, plus the changes that we did with Obamacare. Emerging markets have that lower interest rate boosting its performance. I know China is showing some private sector improvements. There's also higher earning growth across the board. And then fixed incomes, the higher yields offering by attractive returns. Maybe not taking as much risk. Look at more things with that fixed income side of it. Kind of hedging, kind of give me the hedging against that economic uncertainty what's going on. So my portfolio positioning strategy is, they say 40% is into growth, 25% into defensive, 20% into fixed income, 15% into cash. As I'm into retirement, my growth sector of 40%, I'm really looking at this is a separate part of my portfolio. I'm looking to grow a certain part to help for future things down the road. I'm really heavily into that defense sector. I want to protect what we have and just make sure that we can continue doing what we want. That fixed income, that's just because I'm tired of the weeklies that we've had and the fluctuations that we've had. I just trying to get onto a steady platform. So in conclusion, I felt 2025 was a phenomenal year. I did learn that we did have to stay calm with the negative headlines. I had to stay with the fundamentals over hype. And, there's nothing I can do about geopolitics, but all I can do is prepare for them. 2026, I want to diversify my portfolio, probably more healthcare, more emerging markets. I want to be proactive on my risk management. I want to pull my risk back a little bit. And I'm going to continue to look at AI as the future of the economy, the future approach. I want to make sure I'm strong enough in the AI to generate more money. Hopefully you like this. If it's something new I tried, let me know what your thoughts are. Do you like this or you don't like this? Tell me where you're at. Did you have a good 25? Did you not have a good 25? Just kind of give me an insight, guys, where we're at. I'm looking forward to seeing you all in 2026.